Hello guys, and welcome to my YouTube channel. This is King Wesley speaking, and in today's class I'm going to be teaching you about liquidity and imbalances. So without no further ado, I want to go on and dive into what we have today. But then if this is your first time on the channel, do well to hit the subscribe button, turn on your bell, because value will definitely be passed, and you may also want to check out other videos and learn some more. All right. Now, so talking about liquidity and imbalances. All right. Now, first of all, I'm going to start with explaining imbalance. I'm going to be showing you what an imbalance is. I'm going to be showing you how you can identify an imbalance, and then I'm going to go over to liquidity. All right. Now, when we talk about imbalances, imbalance is just an inefficiency in price. All right. It is a space. First of all, when we talk about price, we know that candlesticks is what represent price to us. All right. If we want to say we are looking at price, basically candlesticks is what give us the information of price. All right. So now talking about imbalances, you're gonna know that, or I'm gonna be telling you, or I'm telling you right now that imbalances are inefficiencies in price. So literally, I mean imbalances are inefficiencies on candlesticks. All right. Now, when a candlestick forms, it forms with what? A body and a wick. All right. Now, in most cases, maybe you have not observed, all right? But then when candlestick form, sometimes the wick comes down to close the previous candlestick. I'm going to show you that on the chart, all right? While other times, all right, the candlestick just possibly when the market is moving in a very, very high momentum, all right, the market will not close previous candlesticks. It's just going to keep pumping like that, all right? Now, taking a look at your chart right now, all right? This is an imbalance we have over here. All right, this is an imbalance we have over here. And then something I want you to know is that imbalances can also be called fair value gaps. All right, they can also be called fair value gaps, short for FVG. All right, now take a look at this. You can see that this candlestick formed. Okay, this huge candlestick formed. Let me make this a little bit brighter. All right, now this candlestick formed. All right, now if you check, you notice that the previous week stopped here. That was where the previous week stopped. Take a good look at it. And then when the next candlestick formed after this particular one, all right? When the next one formed, the week started from here. So some way, somehow, we have space. We have this space on this candlestick, and this is what we call an imbalance, all right? So assuming this week, first of all, sold down to this level, all right? And then from this place, or from this week, where the previous week ended, it bought from there, we wouldn't have an imbalance because the candlestick covered up this space, all right? Assuming it sold down, maybe formed a long wick from here, all right? And then before going up, now it covered up the imbalance, so we wouldn't have an imbalance. But then we can see that price did what? Price failed to fill up this space here. So now this is an imbalance. This is an inefficiency in price. All right. Let me give you an illustration. If you are possibly painted before, not drawing, I mean, painting a wall, all right, maybe the wall of a building. If maybe you've painted before, or you have been where someone is painting, maybe where a painter is painting, all right, you notice that when he uses, should I call that a brush, that long stick or brush, whatever that they use, all right, when he rolls up the paint once, all right, some places wouldn't be filled with paint yet. So he will need to roll it down again so that he can maybe give it a double coating, something like that. All right. Now, that is the same thing that happens in price. Price did what? Price rolled up, and then it was able to fill this area. It was able to fill this area, but then this area was left empty, and then it continued filling this area. Now, what price is going to do is that price is later going to sell to fill up this imbalance. It's definitely going to sell to fill up this imbalance. All right. So that is basically what imbalance is. I'm going to be highlighting a few imbalances on charts, and then I'll go on to explain what liquidity is all about. All right. So now this is an imbalance already on the chart. Okay. This one is already highlighted. All right. Now let's check previous price action. Okay. Or let me just go down to the 1 hour time frame. I highlighted one also on the 1 hour time frame. Now this is an imbalance over here. All right. You can see this huge space between this candlestick, the last week of the candlestick, all right, where the week ended, and then we get from here. So this is a huge imbalance, all right. And now this is also an imbalance over here. This is also an imbalance over here. Now, if I should zoom in, you're also going to see smaller imbalances. Let me just show you. Now, this is also an imbalance. This is also an imbalance. This is also an imbalance. Okay? So it does not mean that all these ones I did not highlight here are not imbalances. No, of course, they are imbalances. Now, look what I was trying to tell you. Now, this is an imbalance over here. When price formed this imbalance, okay, leaving this huge space. And then later, price had to do what? Sold back again. And then price filled the imbalance. You can see it sold back. It took out this level over here. Price filled the imbalance and then kept on going up, right? So that is basically how imbalances, all this you see right here are imbalances, guys. You're going to see lots of them on the chart, all right? So all those are imbalances, and then price will definitely come back to fill them up later, all right? So there is a way you can actually trade imbalances, all right? Possibly that will be video for another day. But then I want to go on to explain what liquidity. Now, the idea of liquidity is quite a bit broad, okay, because there are different, let's say, dynamics to liquidity and how you can actually trade them, okay? So now, when we talk about liquidity, okay, first of all, you must understand that liquidity lies on almost everywhere on the chart, all right? Liquidity lies on almost everywhere on the chart. Let me give you an instance. Let's say we have a normal uptrend structure. Normal uptrend structure that goes this way: low, high. What the hell is this? Sorry. All right, low, high, lower low. Sorry, higher low, higher high, higher low, higher high, higher low, higher high. All right. Now you must understand that liquidity lies on both sides of the chart. Okay. First of all, you must understand that above this high over here, we have what? Buy side liquidity. We have what we call buy side liquidity. Okay. Below this low, we have what we call sell side liquidity. All right. Same thing here. Buy side liquidity, sell side liquidity, buy side liquidity over here, sell side liquidity over here. All right. Now, another scenario where you can actually know that we have liquidity lying at that point is when we have equal lows and equal highs. All right. First of all, we have different kinds of liquidity. Okay. We have what we call trendline liquidity. Okay. I'm going to show you trendline liquidity after the equal highs and equal lows liquidity. All right. So now, when we have a setup like this, now this setup is what the retail traders will refer to as what? A double top. Yes, this is what they refer to as a double top. And then this is what they refer to as what? Double bottom. All right. Now, I want to tell you that, or you want to know that above this equal high is what? Liquidity. Now, I just feel like, okay, some people might be asking, what is liquidity? What is liquidity? What is all these things we're talking about? Now, liquidity simply means money. Let me tell you how this thing works. When a retail trader places a short position here, for instance, and then his stop loss is above here, and then maybe he puts his take profit wherever, all right? Now, if price should eventually go up to hit his stop loss, he's going to lose money, all right? Let me say maybe he's risking $100 on this stop loss. If price should peradventure go up and hit this stop loss, he has just lost $100 to the market. So it means his stop loss is where his money is stopping, is where his money is. So if price takes out his stop loss, price has actually grabbed his money. So when you hear liquidity, we're trying to say we have lots of people's stop losses over there and price is eager to go and grab them. Simple. So when you hear liquidity, is basically saying, hey, lots of stop losses are at that region and price will most likely go to take their money. Simple. All right. So we have liquidity above equal highs, and above equal lows. All right. Now the next form of liquidity that we have is what we call trendline liquidity. All right. Trendline liquidity. Now, let's say we have this kind of one. Let's see, we have this kind of price movement. Okay. Let's say we have price doing this. All right. Now we have trendline liquidity beneath here. You know why this is called trendline liquidity? It's actually because retail traders will want to buy here. They want to buy here, put their take profit wherever, and then a stop loss below the trend line. They want to buy here also. They want to buy here. They want to buy here also. All right. So we have lots of what? Stop losses below the trend line. Stop losses, and that word for stop loss is what? Liquidity. We have lots of liquidity below the trend line. Another word for liquidity is money. We have lots of retailers' money below the trend line. So price will most likely do what? Price will most likely sell to grab all these stop losses. Price will most likely sell. That's why I see that it was supposed to be a buy trade. What happened? Then you end up seeing price just selling a little, taking out your stop loss, and then later on you see price going in profit. Hey, you've just been used as liquidity, bro. You've just been used as liquidity. So that is how liquidity, or that is the concept about liquidity, okay? Now, when you are trading, how do you tend to use liquidity in the market? First of all, you want to sell where retailers will be buying. There, that is what we basically do. You want to trade like the bank. But the banks are not buying where you're buying as a retail trader or using the retail concept. No, the banks are not buying where a retail trader or price action a retail concept trader is buying. No, the banks will sell where you are buying because they want to take your stop loss out, and they have bigger money. You with your 1K account cannot stand against the bank with maybe a $1 billion account. Wow, the margin is too much, bro. They're going to move the market. So when you are buying is where the bank is most likely selling. That is where the ICT concept comes into place. That is where the smart money concept comes into place. You want to trade like the smart money. You don't want to trade like a retail trader. Because if you trade like the retail trader, the banks will most likely use you as liquidity, unless you really, really have a good experience with price, of course. All right. So now this is just me explaining what liquidity is all about. Okay. As time goes on, I'll make consequent videos or make other videos on how to trade using liquidity and imbalances. Okay. But right now, if you check my channel, you're going to see more videos. Sorry, you're going to see more videos on liquidity and imbalance. All right. I explained them while taking entry, and just explaining my analysis. I really explained them. All right. So I really hope this video was helpful. Okay. Subscribe to this channel for more videos. All right. And make sure to message me on WhatsApp. Make sure you should really do that. And then if you actually trade boom and crash, join the Telegram channel. The link is in the description box. All right. I send analysis that will actually help you with your daily trading. Okay. So have an amazing time trading. Have an amazing time learning. It's King, and I'm signing out.